Have you ever wondered what inflation is and how it affects you? Well, let's dive right in and unravel this financial enigma. Inflation, in its simplest form, is essentially a general increase in prices, and a corresponding decrease in the purchasing value of money. Imagine walking into your favorite grocery store and over time you notice that the price of an apple keeps climbing, while your money's buying power for that same apple keeps slipping. That's inflation in action. It's like an invisible force that gradually erodes the value of your hard-earned dollars, cents, or whatever currency you use. Now you might think, so what? A few cents more for an apple doesn't sound like a big deal. But over time, these little price hikes can add up, affecting everything from your daily coffee run to your retirement savings. Inflation isn't just a financial term, it's a crucial factor that influences your daily life. To fully understand inflation, we need to take a journey back in time. The concept of inflation is not a recent invention. It has been around since the days of ancient civilizations. In fact, the earliest recorded instance of inflation dates back to Roman Egypt in the 3rd century AD, when the cost of a sack of grain skyrocketed over a period of just a few years. Moving forward in time, the Middle Ages also had their fair share of inflation. This was especially the case during the Spanish Empire's importation of vast quantities of gold and silver from the New World in the 16th century. This influx of wealth led to a significant increase in prices or inflation across Europe. Fast forward to the 20th century and we find a stark example in the Weimar Republic of Germany after World War I. The government printed excessive amounts of money to pay off war debts, leading to hyperinflation. At its peak, prices were doubling every 3.5 days. In more recent times, we've seen inflation playing a key role in economic cycles worldwide. Central banks now use monetary policies to control inflation, aiming to keep it at a steady, manageable level. So, you see, inflation is not a new phenomenon. It has been part of our economic history for centuries. It's a constant player in the global economic stage, shaping and being shaped by the events of the time. Inflation isn't just something we read about in textbooks, it's happening all around us. Let's take a moment to look at some familiar examples. Remember when you could buy a loaf of bread for just $1? Or perhaps when filling up your gas tank didn't feel like a bank heist? Well, the increases in these prices over time are a direct result of inflation. Consider this. In the 70s, you could buy a gallon of gas for less than 50 cents. Now, it's not uncommon to see prices soar above $3. Similarly, a loaf of bread that once cost under $1 now frequently retails for over $2. But it's not just bread and gas. The cost of housing, education, medical care, and even your morning cup of joe have all risen over time. This creeping increase in prices is the practical day-to-day impact of inflation. These examples show how inflation directly affects our purchasing power. So, how exactly does inflation impact you and me? Let's dive into it. First off, one of the most noticeable effects of inflation is the erosion of purchasing power. This means that as inflation rises, the value of money falls, and you can buy less with the same amount of money. You may notice that your weekly grocery haul is costing more than it did a few months back, or that your favorite coffee shop has bumped up its prices. That's inflation at work. Next, inflation can lead to an increased cost of living. As prices rise, you might find that your salary isn't stretching as far as it used to. Your monthly rent may go up, the cost of commuting could increase, even the price of a simple haircut could become more expensive. Before you know it, you're shelling out more money for the same lifestyle you were accustomed to. But inflation doesn't just affect our wallets on an individual level, it also has serious implications for the overall economy. High inflation can lead to economic instability, making it harder for businesses to plan for the future and potentially slowing down economic growth. It can even impact the job market, as companies may need to cut costs and could potentially lay off employees. Inflation therefore isn't just an economic concern, it's a personal one too. Facing inflation might seem daunting, but with the right strategies, you can navigate it effectively. The first step? Diversification. This is not about putting all your eggs in one basket. Instead, spread your investments across various assets like stocks, bonds, real estate, and even cryptocurrencies. Remember, different assets react differently to inflation, so a diversified portfolio can help you balance the risks and rewards. Next up, let's talk about building an emergency fund. This is your financial safety net, and it's more important than ever during inflationary times. Aim to save at least 3 to 6 months worth of living expenses. That way, if inflation hits hard and you face unexpected costs, you'll have a buffer to fall back on. And while we're on the topic of saving, consider where you're keeping your cash. Traditional savings accounts might not offer high enough interest rates to keep up with inflation. You might want to look into high-yield savings accounts or other investment options that can offer a better return. Now, let's not forget about financial education. Knowledge really is power, especially when it comes to money management. Take the time to understand how inflation works and how it affects the economy. Stay informed about the financial world. Read books, listen to podcasts, follow financial news. The more you know, the better decisions you can make. Finally, don't let inflation scare you into not spending at all. Remember, money is a tool. It's meant to be used, not just saved. So go ahead and invest in your future. Pay for that degree, start that business. Just be smart about it. And that's it, folks. Those are some of the key strategies for managing your money during inflation. Diversify your investments, build an emergency fund, focus on financial education, and remember to use your money wisely. Inflation might be an economic reality, but it doesn't have to control your financial future. We've taken quite a journey from understanding what inflation is to exploring its history and effects. We've unraveled the key examples of inflation and its impact on our daily lives. Most importantly, we've shared handy tips on how to manage your money during inflationary times. Essentially, inflation is a powerful force that can either erode or enhance the value of your money, depending on how well you understand and navigate it. Remember, knowledge is power. Understanding inflation equips you to make informed financial decisions and secures your financial future.